Hey, John. Well, it isn't just ride-sharing, micro-mobility, e-bikes and scooters. That market has also been hit very hard during the pandemic. Jump shut down 99% of its operations in March and has laid off about 30% of its staff since the year began. Now, as you mentioned, I did have a chance to talk to new CEO Wayne Ting, and he said, though, that he is starting to bring more markets back online and see business come back a little bit.
Over the last 4 weeks, we started to relaunch in a more limited way what we call essential services. We're seeing really strong demand from riders who used to rely on us, but also a host of new riders who probably never consider micromobility.
Now, that echoed comments that we heard from Lyft's team last night. The company said that it is also seeing some business come back, albeit at a very low base, and that's partly why you're seeing shares surge today. Now, Ting also acknowledged, though, that Lime's valuation took a hit in this deal.
We're not going into the details, but it is a down round. And what I'll say is that these are really unprecedented times, and Lime is not the only company that is going through a cut to its valuation. But the more important thing is that this round of financing is going to give us sufficient capital to withstand the downturn and to come back stronger than ever.
So what does Uber get out of this deal? Well, it actually gets to give up its micromobility, its scooter business to Lime in the process. So essentially getting a quickly growing but very expensive business off its balance sheet as it tries to show investors that it is cutting costs. Of course, Uber reports tonight, and investors will be looking at other investments too, much larger ones. Remember that Uber has stakes in ride-sharing firms around the world.